Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and whatever else is going on with tariffs, because that is the main event. Once again, we will be getting into the market crash that is taking place right now. Trump has been defending the tariffs, saying that sometimes you have to take medicine to fix something. We'll explain what that means and all the reaction to it. In the process, Bitcoin's down 8% to 76K. ETH is down 16% on the day. That's a 24-hour move to 1.4K. Sol is down 15%. Also, 24-hour move went beneath $100. Now has just ticked back up. As part of that, we'll also be talking Trump's announcement that he wants parity in trade with EU, plus potentially reparations for past trade imbalances. And the legendary investor Stan Druckenmiller comes out against tariffs, saying that he does not support tariffs exceeding 10%. We'll get into all of that and more as usual with a general discussion on the market and all the implications of what we are discussing. But just a reminder, friends, before we do that, nothing that we say here is financial advice. This market is very risky and it's going down a lot too at the moment. So we don't know anything for sure. I don't know if Trump knows everything for sure either at the moment. So please do your own research, use your own judgment, come to your own conclusions, and be safe. Be safe out there with this stuff. With that out of the way, legendary, it is Monday. It's the 7th of April. How are you doing? How are you feeling?
GM, we are part of history. Never seen a 2-day market crash like this. I think we have a ton of data and stats prepared for the show. I sound way too excited when given the state of the market, but it is historical. We've never seen anything like that, so it's going to be interesting to get into that. And as you said, probably one of the shows where we really need to reiterate the fact that we don't know anything for sure and nobody knows anything for sure. So many people are saying that the models are not working for the chaos that we're seeing right now. So just take really everything with a massive pinch of salt that we are saying and discussing on the show.
Absolutely. We've got a bunch of other people, kind of prominent traders on the timeline, sharing their ideas. The one thing to note from it will be, I think everyone is saying different things. And a lot of people are owning up to being like, look, guys, this is above our pay grade now. We just don't know how to participate in the market as with this set of facts in particular. Talking of a historic moment though, legendary, I don't know, Brett, if you saw the YouTube comment on our show on Friday where, I think legendary, what he's alluding to is correct. It's like it is quite historic. There's like, this is an unprecedented down movement, and certainly the policies that they're pursuing have not been tried in a very, very long time. Someone in the YouTube comments when we were talking about ETH, because we were like delaying the tariff conversation, I don't know if you saw this comment. It was just like, what the fuck are you guys talking about? This is like a historic move down. Get onto the tariff conversation. Did you see that?
I didn't, but it makes me feel like what Stat was like getting back at, where it's like, Funky and I are like doing the stoic thing. I'm like, guys, I can't spend energy on it. And he's like, guys, that's ridiculous to say, given the context of what's actually going on and the movements that's happened in the market. I actually still kind of have that position where like, I get it. I sympathize it. Like I'm glad you two are here to help us like navigate this stuff. Cause like, I don't have the context to even add to the story, to just like numbers are going down. Like it's beyond me. I'm going to continue to like operate within my bubble. I will say that, you're talking about the ETH price, right? We're down at like 1,500. I think legendary, you probably remember this, whenever I had those stink bids in place for ETH and it was at like 1,500, 1,600. I was like hoping for that spike down because of like the liquidation cascades I was kind of hoping for. Like
when did you put them on, Brett? What price did you put them on? ETH was probably still like
it was like 18, 19 too, like in that range. I think it was oscillating. I think it spiked down in like 18.5.
And then went back up to 2.1.
Yeah, and it was starting to like do that stuff. And I think Legendary and I mentioned to him in that conversation, I was like, I want those prices if it goes there within the next like 2 days. I don't want those prices if they go there in the next 2 weeks, 2 months, whatever. This is that. I took them off, thankfully. It's like, so I'm glad you led with, prolific traders. Clearly I'm one. I foresaw this. I pulled those bids out. I do not have any more ETH than I did at that point in time. I just have a bunch of USDC. So like, now maybe I'll start buying some shit, because like now I'm there and I can actually start evaluating. It's cheaper than what I was even going to get with my stink bids.
Mhm.
Yeah.
Interesting. Okay, so when we're talking about like how to potentially take advantage, I think we're going to go in that direction towards the end of the show. So curious on your thoughts there, Brad. Funky, your hand is raised. Welcome to the stage, my friend. Any early reflections, early ways you want to set up the conversation today? We've got a lot to get into, a lot to try to cover. How are things your side?
GM, I'll just be very brief. I'm still with Brett on being stoic. Of course, I empathize with others, right? Like, because again, this is all stuff that's beyond our control. But I wanted to share a quick story because I'm probably the only oldest person in the room to remember this. I was 12 years old in 1987, and I remember my dad coming home one day, that particular day, Black Monday, when this all happened, and he was distraught. And I remember asking him what happened, and he said the worst day ever on the stock market in my lifetime happened today. And the reason I share this story is because we're now entering territory, to Stats' broader point about how historic this is, where everyday average people are starting to pay attention and be like, what the hell is going on? Because this is not, like 8% of like the people in the world own 90% of the stocks or something crazy like that, right? It's all the very wealthy that own all of this. But when it's getting to this point where it's making headlines and it's freaking people out who are just everyday folks, this is a different kind of territory and waters that we do not tread in very often. Generational, to say the least. So interested for today's conversation.
Yeah, and it was very interesting. One stat on that, because it's not part of the main conversation either way, coming from JP Morgan last Thursday, saying that retail investors bought $4.7 billion in stocks on Thursday, which was the highest level over the past decade. So definitely true that retail is noticing that something is going on, and some people at least are buying.
That is going to be something that's interesting to watch as this unfolds, right? Like the access to like financial instruments has been democratized heavily over the last 5 years, right? That the proliferation of options trading and whatever else, like, you have your applications now that instead of going through a brokerage, like there's still brokerages, but like you can quickly buy stocks through like 9 different apps. Like I can do it on a PayPal just as easily as I can send you $5, right? So like seeing the ability for the actual market to react, like the average person within the market to react, is going to be faster these days. So like, something worth monitoring to see how they behave.
I like it. Good setup for the day. Let's get into it as usual, starting with the price action of both the majors and some of our favorite meme coins. Getting into Bitcoin first, it is down almost 7% in 24 hours. It's at 77K now. I think it went down as low as, let me check for you, went down as low as 74. I think just ticked under 75. So bounced a little bit already, up at 77 now, 77.3. ETH is down 16% on the day. It's just hovering beneath 1.5K, down 17% on the week. So all of that move is basically over in the last 24 hours. XRP is also down 14% to $1.80. Solana is down 15% to $100, went as low as I think 94, 95. It's ticked back up just a touch. Getting into the meme coin side of things, we have Doge down 15% at around 14 cents. Pepe is down 13%. Trump is down 14%. Bonk's down 11. As usual. Well, Brad, you're looking at the market. What's Fartcoin doing?
It's always the most volatile. Where are we at?
So you think on the red day it's down more than everything else, right?
No, it's got to be up. I bet it's got to be up.
Correct.
It's the counter trend.
Well, it is today. It's up 1.6% in the face of all of this market stuff. And on the last 7 days, it's up 18%. So do with that information what you will. I don't know what to do with it. Interestingly, SPX is also up 4% in the last 24 hours and up 15% on the week.
Can you go back and look at Hype? I want to see. I listened to Jeff do an interview, like with all the recent drama of. It's got to be a top, whatever, right? Yeah, there you go.
So Hype is down 9% to $10.30. It's around down almost 20% on 7 days. So a little bit more than the others down, but not.
This is one I want to maintain awareness of. I think in an environment, like if we're going to pull ourselves out of all this shit, right? Like I think Hype, if it maintains its position as like the place to go for like perps trading activity, whatever, I think it'll be the one that calls out first, or one of the better ones to call out. So I think I have no exposure to it. So like it's one I want to gain exposure to. So I'm going to keep an eye out on it.
Interesting. I'm going to come back to you on that in a second, Brad, if you watched the interview, because that was an interview I wanted to watch. So I'd be curious for your learnings. Pengu's down 12% as well. WIF is down 11%. I'd say broadly, that's the kind of region you're looking at here on all the memes. Double digit down is what I would say. Trying to pick out anything else that's interesting, but nothing in particular, to be perfectly honest. Getting into the main headlines themselves, we've got the market crash continuing. As you mentioned, if you're just joining us, Trump's defending the tariffs, saying that sometimes you have to take medicine to fix something. That has caused the sell-off that we've seen in crypto. Legendary is going to talk about how it's affecting the rest of the stock market too. Nothing has been spared, really. Trump announced he wants parity in trade with the EU and reparations for past trade imbalances as well. It's a little bit of a throwaway comment that he made in an interview, so you never know how much weight you need to attach to those types of comments, but we'll touch on it a little bit more later. Legendary investor Stan Druckenmiller came out against tariffs. Quite a few prominent people were coming out kind of suggesting at this point, all right, guys, let's stop this now. You've had your fun. It's about time to row this back now and do not go through with what you're saying you're trying to go through. However, Scott Bessent did an interview with Tucker Carlson. I think it might have been on Friday, but I watched it over the weekend. Kind of indicated that this is the plan. I'll be walking us through some of the learnings there and the takeaways. He also said as part of that interview that Bitcoin is becoming a store of value. As he just before he then went on to speak about gold quite a lot and why he thinks that's an important store of value as well. Getting into some other notable price action, Bearer Chain was down 24% to $4.30. There was so much activity and positivity around what's going on there. I don't know if there's anything specific to note there. It's just everything's getting hit at the moment. That's maybe got hit a little bit harder than everything else. Legendary, is there anything going on the NFT side? I would bet yes, because of such volatile moves in ETH. So what do we need to know?
You would be correct. Everything is down on the NFT markets as well. Bored Apes, which traded at 15 ETH last week, are down to 13.7 ETH. Pudgies have fallen under 9 ETH even, sitting at 8.9 ETH. Azukis are down to 2.44 ETH. The one collection which is doing pretty well, to be honest, we mentioned it on the show, Steady Teddies are up to 177 Bearer.
Yes, bro, they're bears. That makes sense. That's just logic.
It is. They might
but also Bearer being down 25% in one day
doesn't impact them too much. They might be down 7.5% over the last 24 hours. However, they're up 54% over the last 7 days. When they came out at mint, we reported on them that mints were up 9x at a 100-ish Bearer floor, and that almost has doubled again. Also taking a quick look at CryptoPunks, they are holding up very well in ETH terms, still at 42.6 ETH floor. However, that is now translating to 63K USD.
Ooh, that is starting to get to a nice price, right?
Depending on how you price them, yeah.
Well, assuming you're pricing them in dollars, you don't really get punks for less than 50, I don't think. Or at least that's been the case beforehand. Obviously, it's like the ETH price being low is very bad for punks, even though people know to try kind of price them in dollars now. I think it still doesn't help. Like this is always a bit of a run as people, as ETH is going up and people are feeling more wealthy. They're very happy to spend it as it goes up, but as it goes down, the wealth effect is not there. So kind of attractive prices. One thing I've noted though on the CryptoPunk floor, it's not easy to find. If you want something specific and you want something that you specifically like, you have to go at least 1.5x the floor, if not 2x, to really get to things which are either slightly more unique or something that might
aesthetically pleasing.
Yeah, like if you're looking to match, like I was trying to match my penguin with the eye mask with another one, with a punk with a eye mask, and it's too expensive. It was way above floor. So I think that's something to note there. But as you say, very attractive prices now for punks. Okay, so that's the NFT side of things. What is going on in the rest of the market? If anything, you might have noticed in the snapshot today when I researched and wrote that and published it, I didn't even bother with very many other pieces of news because it feels like there's just a bit of a standstill. If you're a team right now, think about it. Why would you come out with news at the moment when it's going to get completely overshadowed by everything that is going on instigated by the most famous person in the world producing like headline news every single day. So I can see why teams are taking this approach. Just a couple of bits from around the space. Lens Chain announced SocialFi mainnet was now live. I think this is by the team, or like an adjacent team to the Aave group. They're trying to build SocialFi out in a Web3 way. So that's interesting to note. Codex, this was an interesting one. This one brought to my attention. Codex announced a $16 million raise led by Dragonfly to build vertically integrated stablecoin infrastructure. We've spoken about Plasma before, which is backed by some very big people, including angel investors like Kobe. The Tether team are very much behind it. Paolo is involved. So that's like a stablecoin chain, which people are quite excited about. Now we have an alternative one, the raise led by Dragonfly, to build an integrated stablecoin infrastructure. So I think that's pretty important too. Seeing a lot of dollars going into stablecoin chains or stablecoin infrastructure. So that's interesting to note. And then finally, the SEC determined that fully reserved liquid dollar-backed stablecoins are not securities. That was announced by David Sachs on Twitter, I don't know, at some point over the weekend. So those are the only other bits I could find that I thought were relevant over the weekend. Want to come to you boys before we get into the main stuff today. What's either catching, whether it's anything there, whether it's something else catching your attention? Maybe, Brett, I want to come to you in a second about the Hyperliquid interview that you saw, because I'm kind of intrigued from your takeaways from that. But Legendary first, what's anything else catching your attention or anything from there?
Yeah, maybe on the stablecoin side of things, Brian Pellegrino, CEO founder of Zero Labs, has talked about the current market situation and basically has said that he sees stablecoins as a potential way for the US dollar to maintain its global dominance. I thought that was an interesting bit. And maybe connected to that, the question to the both of you is, any of you worried about stablecoins depegging? Is that something you've been thinking about, not on your radar at all? Like, how are you feeling about this? Personally, I am at this moment in time not really concerned about my stablecoin holdings, because there's no real reason to be concerned about them. The only thing, obviously, that's bothering me is, as I'm pricing everything in euro because I pay my taxes and my shit and everything in euro, is that the dollar is getting weaker and weaker, but no systemic worry on my end about stablecoins. What about you guys?
Yeah, 0 for me.
So when you say stablecoin, I guess it's worth saying there are different kinds, some of which are not necessarily even stablecoins. So for the, I have two responses. One, when stuff starts to break, when you see moves this violent, I always just want to think holistically about my portfolio. Like, where are my pain points? Where are my risk points? And I think one of the things I thought yesterday was, okay, I think on the stablecoin side, on the pure stablecoin side, I think I'm okay. And I'm comfortable with USDC. I'm comfortable with Tether and things like that. Athena, obviously being one of the newer synthetic dollars, not a stablecoin, although it is treated like a stablecoin. Synthetic dollar is newer. It is typically best when in risk on markets, because that's when the yield is best, and that's why people are happy to hold it. And they'd run all these models to make sure that, look, even in times when things go worse, we should be okay. They'd run all these models before they've shared that. And so far, up to this point, I mean, it's not, we've experienced multiple drawdowns at this point, and they've kind of come through that with flying colors every single time, basically. And so that would be the one thing where, as I'm holistically assessing my portfolio, just like, okay, I have a reasonable exposure to USDE. So just checking in there to see if it's all working as it's supposed to, making sure that the people who are redeeming for stablecoins, is it all working as it's supposed to? If it is, no problem. If it isn't, then you double click on it. But that would be my only point, to be honest.
Yeah, I think, yeah, you have like two buckets, right? Like, I think back to the history of when stablecoins have been iffy. For me, as like a holder of coins, like I remember doing the USDC trade when it hit like 80 cents, right? And that was exogenous stuff, right? It was the banks that were utilized by Circle were the ones that were getting attacked, right? So like things were starting to shut down, like, and because of that, people are starting to freak out and get out of USDC, which almost causes depeg, but it was fine, right? And then you have like the stuff that's within the ecosystem, right? You have the algorithmic stablecoins, right? The Tether, or not Tether, whenever it was Luna, Luna's stablecoin, and then you have some of these other stablecoins, like we're talking about synthetic dollars out of Athena, which I think has been a little bit more tested recently. So I don't. And unless we get like some massive, which we might actually with these price movements, some massive liquidations, which force people to like violently move prices, which then can potentially have some teetering effects to on-chain stablecoins or just on-chain manipulated coins, algo coins or yield-bearing coins. Then yeah, it might be something to keep an eye out, just like BCheck is. But I'm mostly positioned in USDC, so like for me, I'm totally comfortable, especially with the friendly regulation framework that's coming towards that stuff. I don't anticipate anything that is like before exogenous to our industry getting attacked to then like go after the actual backing of the stable coins that are on chain with Circle. So I'm comfy.
Okay. I think that's helpful. I think we, on a day when all this tariffs, all the headlines are maybe slightly quieter this week, I think we'll start to have these conversations more about like, look, how are we responding personally with our portfolios, and like how are we thinking about things. We'll try to do that a little bit today as well towards the end, but in general, I think that's a good question, Legendary. Just like, that's something that came to mind. We'll want to deal with that as the week goes on as well. But to the point, I want to get to Legendary is going to take us through all the tariff stuff in a sec. But before we get there, Brad, you mentioned you watched the Hyperliquid interview with Jeff over the weekend. I agree with you that hype is something. What do I think on this? I think if the new set of protocols, well, no, I'll rephrase that. If there's going to be more success coming out of crypto in a time when all of these regulations are changing, there's never been more criticism and skepticism about the way that tokens are launched and the value attributed to them. Like all of these VC coins go down, all of these other types of coins go down. It seems like it's very, very difficult to attribute value to them. I think it's very important for the future set of teams who are building that this more recent set of teams, something like Athena, something like Hyperliquid, who've come out and been successful and found a way to demonstrate value to people, that they are able to continue to demonstrate that value prop. So I'm curious what you noticed, and I'm kind of watching Hype as one of those teams as well. What did you notice in the interview? What did you think was important? Why did you get interested in the ecosystem?
Honestly, it's more of a product focused vision and like the environment we're in, right? So it's very clearly shown itself to be a very strong product within our industry, right? It captures basically like it's not nonstop eating into the perps volume of basically all other products within our ecosystem, right? So it's showing to be sticky for the actual users. Prior to like this, I'll even say exogenous to them, like this is just like broad market stuff that's drawing down everyone. Prior to that, there was a FUD spike around like the recent events where the HLP was getting attacked, right? They're actually revolt, all this stuff. And then, the actual environment that we're in right now, or like what crypto is good for, is fucking trading, right? Like it's just swapping tokens is what everyone is drawn to this industry for. So I just thought they held up pretty well to some attacks. They're getting better at it. They're showing to be resilient. Some people saw what was happening and go, oh my God, they're a centralized platform and they're going to like steal my money if I put it in. What I saw was that like, damn, these boys are not going to lose any money. Right? Like someone tried to attack them. They quickly stepped in and rectified the situation, ended up coming away with a profit, right? It's like it went from down 12 mil to like up 700K. Like, you know what? That like CZ was doing something a lot akin to that with BNB back in the day, right? Like they would have hacks, scams, whatever, because it has like 8 validators on that chain. They fucking locked it down, and they were able to recover some of those funds. So for me, I saw it as like, well, if they're going to step in every time there's a massive exploit or something that is like heavily leaning against them, that's cool. The product's good. The market is down, and like once speculation comes back, right, it's going to come back strong in the platforms that are actually pretty good at speculating, right? Which would be them. They list stuff early. They have a lot of good. So it's just, that's why it's something I want to watch. The interview itself was mostly around the structure of the platform and some of the misunderstandings that Jeff believes is out there for the protocol. One, he kind of defended the like, oh, we're actually a little more decentralized than everyone says. Everyone thinks it's just me like running the validators, but we actually have 16 validators now. Two, talking about the hyper EVM side of the house, which is like, they're just like, we have this really performant, really profitable side of the business, which is hyper core, right? It's all cool. It's doing great. High volumes. Like I said, it's eating into most perps of everyone else. And then hyper EVM, which is their programmable side, is super fucking slow. I've commented on that. It's kind of shocking how slow it is. And he's like, it's not meant to be as performant as the other side. It's just meant to open up programmability to this hyper performance side of the house that we have. I still think that's the wrong move, but I don't think it's detrimental enough that that it will detract from the value prop that is hypercore. I think standing alone, like that thing will be good enough. So I just want to get some exposure to that. Now that like the downside is like the insurance fund that they have in case things go sideways is all denominated in hype, right? And we historically have shown like, well, if the thing backing all the thing is the thing that is also valued by your thing not being fucked up, is like that's the Luna model, right? Like Luna shows to be weak. Therefore, the price of the thing goes down. Therefore, like everything you have that's quote unquote backing this stuff is also worth zero. So like that doesn't work. Maybe that gets rectified in the future, but I don't see it as a huge issue in the immediate future.
Okay. Yeah, I think very helpful summary of some of the good points and some of the ongoing challenges. I like the idea. It's something I've dived into a lot, actually. If you're curious, I'll share some stuff with you. But in general, one of the things we're doing, we're about to open up our Discord in a much bigger way. At the moment, it's like a very small experiment with just a few people, not too many. We're going to be opening that up on a much bigger way. And one of the things we'll be doing is sharing all of our research into things like that. Now, obviously, we don't know for sure. There's all kinds of risks involved with any of the things all the things you just mentioned. But like me personally, I've done a significant amount of research on hype. You know, when you're thinking about these new ecosystems, you want to find like, what's the Aave for hype? What is the Jito for hype? What is the give me another one.
Yeah, just
what is the
like
Uniswap for hype?
Yeah, you need lending, you need the aggregator, you need the DEX,
Exactly.
you need the.
So you've got all of these things which are absolute core components for any successful chain. If you think that's going to be one, or if you're interested, then you want to play around, you want to be there, participate. And so I've done a lot of that work, and that's one of the things we're going to be putting out in there. And hopefully that'll be helpful to the people who join, but we'll be rolling that out in due course. It's just a quick reminder on that, because I think what you're saying, Lean, kind of helpfully illustrates what we will be sharing in there. Enough of that though. Legendary, it's time. We've got to get into the tariff stuff. All kinds of humongous, well, a set of humongous headlines. I'm going to just leave you to take us through the most important information as you see fit.
Awesome. Markets are crashing globally. US stock market has wiped out more than 9 trillion since Trump's inauguration, 5 trillion of which have been evaporated between April 2nd and April 4th. That was the largest two-day loss on record at the end of last week. That data is according to MarketWatch. Just to look at a couple stock indices, globally speaking, we have the S&P 500 down 10.5% over 2 days. Japan's Nikkei down 7% on Monday. That is extending on a 9% drop from the previous week. That makes it the worst since March 2020. Hong Kong is down 13%. Hong Kong's down more than the other indices for the sole reason that the market was closed there on Friday. So we are still catching up on that, so to say. European markets are also suffering strongly. Euro Stoxx down 4.9%. Broader Stoxx 600 down 4.4%. France is down almost 5%. So is Germany. So is London. Italy was down 5% as well, but now seems to be the only piece of green on this world map that I'm sharing on the screen currently. Also, analysts on the Wall Street, both JP Morgan and Goldman Sachs, are increasing the probability of recession in their models, with Goldman Sachs thinking that's a 45% chance to happen. JP Morgan seeing that at 60%. We'll also take a look at some data coming from Polymarket a bit later. And as you have said, B, in the beginning of the show, Trump is very much convinced that this is the right move. And he's actually commenting that on Truth Social on a post that came out just before we started the show in a very, very Trump-esque and positive way. I'm going to zoom in a bit on that. He's saying oil prices are down, interest rates are down, the slow-moving Fed should cut rates, food prices are down, there is no inflation, and the long-time abused USA is bringing in billions of dollars a week from the abusing countries on tariffs that are already in place. This is despite the fact that the biggest abuser of them all, China, whose markets are crashing, just raised its tariffs by 34% on top of its long-term ridiculously high tariffs, plus not acknowledging my warning for abusing countries not to retaliate. They've made enough for decades, taking advantage of the good old USA. Our past quote-unquote leaders are to blame for allowing this and so much else to happen to our country. Make America great again. I also want to get into some of the reactions from other countries and some more bits and pieces of data, but I know this is a lot, so I'm going to pause here for a second.
What was your thought then, Ledge? Thanks for that initial summary. I know you've got a bunch of other data and different directions to take this because there was more to digest. But what was your read on his key message this weekend? Like, what was your personal read on it?
I think that he truly thinks this is the right way to fix this trade imbalance, the trade deficit of $1 trillion. And over the course of the weekend, on the timeline, we've seen more and more all the quote-unquote historical interviews with Trump surfacing, where he's been talking about tariffs and been talking about the fact that he thinks they are a great way to fix what is wrong with the trade deficit, what is wrong with the USA's trade in general. So I truly think, in this post that I just read from Truth Social, which came out 10 minutes before we started the show, seems to exactly confirm that he seems to be convinced very much that this is the right way to move forward. And just because of how historical this thinking of his is, and that's my personal opinion, I am very much not inclined to think this is some sort of genius plan to get in a massively positive negotiation position. There's been some commentary from people who are close to him in the White House who allegedly have been saying that he did not intend for the market to crash this hard or for the market to crash at all. But then I'm also thinking, now you have this position where you came out just a couple of days ago with Liberation Day on April 2nd and have tariffed the entire world. Now you can't fold your hand and be like, oh, sorry, I'm going to take all of that back because the whole world is crashing to historically unprecedented levels even, because then A, you lose face, and B, nobody's going to take you seriously. So you kind of have to follow through with this for a bit longer. And we'll also have for a bit later some Polymarket data on that to see how the market is thinking, how long this situation could last.
I like it. I think that's been one of the key I think maybe that's one of the things that people have been, if you zoom out, I think that's maybe one of the key arguments that people are having. Some people are thinking that in essence, he is not serious. And therefore, look, guys, just relax. Like, it's not a serious thing. Don't worry about it. And they're evaluating everything on the basis that this is not a serious thing, that it's a tool for negotiation. And that's the foundation from which you're meant to analyze the situation. If you are of the opinion, which I think you are now, either moved towards Legendary or whether you were there the whole time, it's like, no, this is not a negotiating thing. This is the way it's supposed to be. That completely changes the way that you're analyzing the situation. And I think that part of the confusion has been, which of these two situations are we in? A lot of the arguments are probably taking place because certain people are thinking, are using like framework one, which is he's not serious, don't worry, it's just like a negotiating tactic. And some people are saying, no, it's not. Therefore, we've got to take it much more seriously. And until you're on the same page, until you actually know what it is, it's hard to have a conversation or an argument, discussion about the merit of something, because some people are not even taking it seriously that it's a possibility because they're just thinking that it's a negotiating tactic. So go on, Brad.
This is just like, so independent of the individual, like the specific tariff conversation, this is Trump's, like this is your view of Trump, or how anyone views Trump, right? You either think the dude is saying what he means, or you think, which is dumb, or you think he's playing 5D chess, right? Like you're like, oh,
it's 5 now. It's 5D. I thought it was 4 before.
Multi-dimensional.
Give it another month and it'll be 6 and then 7.
Right. they're like going into this, they're like, oh, this guy is just playing on another plane of existence, and therefore we don't understand the literal words that he's saying. And then the other side of the thing is like, no, the dude's been talking about tariffs. He loves tariffs. He's been doing it since the 80s. Like he means tariffs, even if he like misunderstands the actual calculations for like how he's going to attribute these tariffs or like the amount he's going to attribute. So like I think anyone's general position on this is mostly around how literal you're taking the person. And if you believe that he is like you're giving him grace, and like the grace you give him is that you think he is doing this as a feint to then like trick people into giving like the art of negotiation, or if you just think he's literally silly enough to impose this number on all of these countries, which I tend to be on that school, right? I think the dude is just like, he keeps saying what he thinks, and what he's saying or what he thinks is just kind of so ridiculous that everyone is like, he can't be serious. And therefore they imbue this like the 60, 70 chess stuff. Whereas I think he's just like, the dude's just kind of been going through his life like this the entire time. And everyone keeps doing like this happened with the wall, right? He's like, oh, I'm going to build a wall like between us and Mexico. And everyone's like, guys, he's not talking about a literal wall. That's clearly insane. That's stupid. No one would say that. He's talking about strengthening our foreign policy with our neighbors to the south. It's a metaphorical wall. And then you see him standing in front of like 9 different types of walls. And he's like, oh, that one's good. I want the barbed wire at the top. Make sure we put a stick over here. Like he's literally talking about walls, people. Like he's talking about walls. He's talking about tariffs. He wants to do these fucking tariffs. This is what he does. So I'm in that school where he's like, he's going to throw these fucking numbers out there because this is what he's always meant. And it's never been some psychological trick.
To your point, I agree. I'm in that camp as well, I think. And I also think simultaneously, and Funk, I see your hand up, I'm going to come to you in just one second. I also think that when it's Trump saying it, people have particular reactions. And therefore, the thing that I've noticed in people's reactions, they take what Besant says as like slightly more palatable. And so I watched the interview with Tucker over the weekend, and I'm just trying to find my notes here, like maybe a couple of the key points. One of the things he said on tariffs specifically, it's not like he was coming out grossly against tariffs either. And so look, again, you can have a different discussion of like, look, are they just all like super loyal, and if they're ever disloyal, they're going to get thrown out? That could be a possibility. Are they just towing the party line now? All of those things are a possibility. But when he was asked about tariffs, he said, if tariffs are so bad, why do they have them? Speaking of the other countries. So like, why does Europe have them? Why does China have them? Everyone's acting like they're so bad, but why does everyone else put them on us? If the American consumer is going to pay all the tariffs, then why do they care about the tariff? The point being that if it is truly going to be the American consumer that's like made super worse off from it, why would the other countries be concerned? And I think his specific point on tariffs, just to articulate that idea for the people who are, trying to figure out why, is like the proportion. I think when he talked about the China tariffs, the proportion of the tariff which ends up getting passed on to the US consumer ends up being a very, very small number versus the headline number. Now, we can obviously argue about that. That was Besant's position. The reason why I'm explaining that is because it seems to be the case that if Trump is saying a bunch of stuff, the market is even less trusting, or like doesn't really know which way is up. I think based on the way I've seen people speak about Besant, is that they certainly want to trust him more. They think he's got a steady hand, and that's why I'm sharing what his perspective was, and at least the arguments that he's been making, whether or not they're obviously guided by the party line, and whether he feels like he's compelled to say those things. It's helpful to know what his arguments were as well. Funky, your hand is raised. What is your take here on any of the new updates on the tariffs?
Yeah, just real quick, one thing. I had my hand up and I pulled it down because I thought maybe that was too crazy. But then Brett reminded me how crazy Trump is. I swear I saw today or yesterday a Truth Social tweet from Trump, a post that said ramen is back on the menu. So like
at first I thought, oh, maybe somebody photoshopped that and he wasn't being serious. But then Brett just brought up these great points about like, you never know what this dude is going to say. Like, he will say some crazy stuff. And to the point about Bassett, go look at Sam's tweets. He and I were having a quick chat about this. He thinks Bassett will be the first to go because he thinks that like there's quote unquote too much daylight between him and Trump, that he's not like a true Trumper the way that say Howard Lutnick is. And that if this all needs somebody like to be scapegoated, it's going to be him for some reason. So that was interesting.
Yeah, I think that's interesting. I definitely think Lutnick is, if you listen to the Lutnick interviews, Trump and Lutnick go back like decades. They're like friends from going out in New York when they were tearing it up in town. So he's like a proper Trumper. And yeah, sure, Besant might be a newer person. Personally, I don't see the divide. I get the sense that Besant is at a minimum on board with this, and he's chosen to serve the country, his country, because he thinks this is an important thing to do. That's just my personal read based on probably a couple of hours of interviews that I've seen with him. But you never know the people's intentions deep down. So that's my personal read. Legendary, I want to come back to you because I know you've got a bunch of other interesting information on this, and maybe we can take the conversation in a different direction.
Yeah, absolutely. Another thing I want to look at is how countries have reacted so far. So in Europe, we have the German Minister of Economy, Robert Habeck, saying that it is necessary that the European Union is providing a unified response to the US tariffs, and that they need to act clearly, decisively, prudently. We don't have a final decision yet from the EU, but I will expect that something will be able to provide updates over the course of this week. In Asia, however, we've seen several nations already initiating measures to counteract some of the economic impact of tariffs. We have China with the Sovereign Wealth Fund, the Central Huijin Investments, intervening to stabilize the stock market by purchasing domestic shares via ETFs. That came again after the Shanghai Composite Index saw that a 7% drop, which was its worst day in 5 years. In Indonesia, the Bank of Indonesia has announced plans to, quote unquote, intervene aggressively also in the domestic exchange markets and to stabilize the local currency, which has depreciated as a result of this to the lowest level since their 1998 financial crisis. They both will take place, those countermeasures, in the spot as well as in the forward markets. In Taiwan, we've seen the FSC, the Financial Supervisory Commission, imposing temporary restrictions on short selling to also mitigate some of that turmoil we've seen as a result from the markets, and that there's a new minimum short selling margin ratio and also a limit to the volume of shares that can be sold short. So pretty swift interventions coming from central banks and financial authorities in some Asian countries, while the EU is taking a bit more time to formulate its strategy.
One point to come in here, Ledge. What was the news? Did you see the news where allegedly there's 50 countries? I think it was 50 countries that have come forward to say that we're ready to negotiate, right? Is that correct? Is that something that you know as well?
Yeah, I've seen reports on that, and it's hard to say anything more specific on that, because obviously all countries kind of want to talk to the US right now, so we don't really have a list of those 50 countries. Something more concrete that we've seen is Argentina's President Milei kind of doubling down on his very positive relationship with Trump, and it looks like they have the first bilateral agreement to have a zero tariff framework, that is Argentina and the US, but not too much to comment on these other 49 countries who have reached out and in what capacity that has happened.
I heard, so all of this conversation stole like every one of my podcasts. So while I was driving down to Redwoods, all my crypto podcasts were talking about Trump, which is unfortunate. Anyways, in that conversation, a lot of them are highlighting these like different blocks that are coming forward to negotiate or to like try to negotiate, right? So you had mentioned the EU already. There's actually one that was actually in the Asian countries, right? There's China, Korea, Japan. Like, it was actually surprising to see like some of these groups that were forming, and if China groups up with the remainder of those countries. Like that's actually a pretty strong force, given given like where our debt is outstanding in the world. So I like that was something that was repeatedly mentioned across media outlets. It was just the blocks that were forming.
Yeah, fair point. Ledge, anything else?
Not on that specifically. However, what I want to do is take a look at Polymarket to
Yes, please.
get a bit of a feeling of, well, what the market is betting, what the market is thinking from Polymarket's perspective. The first bet I want to look at is which countries will Trump reduce tariffs on before June? That has 426K in volume, rather recent bet, so not too much volume in there just yet, but already significant. And just from looking at that, we see very strong conviction with countries like Vietnam, with countries like Cambodia, with 75, 85% chances, respectively, that tariffs for those countries will be reduced before June. I am on purpose ignoring some of the other top ranking countries because they just have a couple K in volume in them. So I'm just looking at those who have accumulated more volume. Laos, for example, with 167K volume, 67% chance that tariffs will be reduced. The really interesting one to me, the European Union, because it also has significant volume in there, 120K, 60% thinking or 59% thinking, just ticked down a bit, that tariffs will be reduced before June. So if you evaluate that, it's a bit more than a coin flip what the market is thinking right now. So it could be that some of this stuff gets resolved by the end of May. It also could be that it takes way, way longer. So right now, the summary would be that we have a bit of a tendency to say that this will be at least partially resolved over the next 8 weeks, but still a lot of uncertainty going on there. Then the next thing I want to look at is the US recession bet. I said it before that both Goldman Sachs as well as JP Morgan models have increased their probabilities of recession coming. Polymarket has this question as well, US recession in 2025. Again, they use the standard definition of 2 consecutive quarters with negative GDP growth to determine if the US is in a recession. And currently, the odds for that are at 64%, had ticked a bit high at 67, but still holding up very, very highly. Also, looking back to the start of the year, where the market was thinking there's only a 20% chance of this happening. So this has more than tripled up to now. And the final thing that I want to look at is the Fed decision in June, what the market is thinking here. 34% says no change happening, and 56% are thinking that we'll see a 25 bips decrease as when it comes to rates. That is up a bit. Used to be more. 47% thinking that just a couple days ago. So these rates have been going up significantly. And notably, now there's a 10% chance that we'll see a 50 bips decrease, which basically used to be a 2 to 3% only 2 to 3 weeks ago. So to sum that up, market is becoming more confident, was thinking more strongly that we'll see a rate cut in June.
Okay. So I think, thank you for that. The thing that I think it was Besant again in the interview, things that I see are not being spoken about as much. And again, we're no experts in this stuff, but the things that they are pointing towards when it comes to the tariff, yes, everyone in crypto is obsessed with the rate number, right? Everyone wants just rates to come down. If rates come down, we go up. And I saw an interview with Arthur Hayes over the weekend, and he was like, look, ultimately it's kind of simple for crypto. Like if the money supply in the world goes up, we go up. So that's, on a simplistic level, those are some key data points. But the things that the administration were pointing towards post all of this conversation is, one, the 10-year yield for the treasuries has gone down beneath 4 for the first time. Maybe it's ticked above 4, Legendary. I don't know if you can just check that quickly. But under Biden, and this was a point that Besant was making, under Biden, maybe even at the start of Trump, I can't remember exactly, but that was as high as 5. And when you have as much debt as the US has, that number is just very high, because it's too high to too much of the money that you are bringing in is going to service this debt when that debt is at around 5%. It went because of all of this stuff, as you can see on the screen now, we're showing it. It's broken for, it's like 3.974. And so what they are pointing towards is saying, like, this is good. This is good that the 10-year treasury yield is down. The other thing that I had not really even considered, and I've seen a few people point towards, haven't even considered the full implications of this, but I'll just say it out loud and see what we think, is the oil price. So apparently oil, Ledge, I don't know if you can bring this one up as well, but oil is significantly down as part of all of this stuff going on. The oil price has come down a lot. Ledge, do you have that one around or not quite? What are we looking at here in terms of the numbers?
We are seeing oil prices being down for crude oil 2 to 3%, 2.5%. Yes, that is over. Let me see. Sorry, it's taking a bit. 2.5% over the last 24 hours, and over the last year. Okay, this is not working. Give me a second to find a better chart.
That's fine. But anyway, so the point is, these were two of the data points which the administration were pointing towards as like, these are the things we're looking at. These are the things we're looking at. And then the other thing from the Besant interview, which in terms of what they're trying to prioritize, he told this story about how last year in the States, you had the record number of US holidays to Europe, whilst simultaneously having the record number of US families using food banks. And the point being that this discrepancy is too wide. Something needs to be done. And when he was talking about stocks, they seem to be very, and I think this is coming to a point where, like, should you take these guys seriously? Should you not take them seriously? They know what they're doing is going to hurt stocks. They think they know that at this point. These people are not, as much as people want to say, call them names and say, like, Besant is highly, highly accomplished, even if you don't like Ludnick or you don't like Trump or whatever. But they know that there's going to be a toll. But when they speak about these other stories of like the things that they're trying to achieve, and who knows, maybe there's side objectives as well. But at least that's the messaging, which is we need to. What? Oh yeah, this was a great quote actually from the interview when they were talking about how all the gains were lost in the Mag 7. He said he pointed towards, look, it's not the tariffs, it's the what was the name of the Chinese AI thing? DeepSeek. Once that came out, that's what kicked it off, in his opinion. That's what he said. At least that was one of the reasons. DeepSeek kicked this off. There's been a huge AI bubble going on in American tech in general. In his opinion, that was at least part of the reason why this downward trend was kicked off. And he said the stock market, or at least those losses in the tech sector, that's a Mag 7 problem, not a MAGA problem. And so if you're wondering to what extent these people are serious about what they're doing, I think they're basically saying, look, we're happy to take some of these hits in the market. I don't know for how long, and obviously it's been hit already significantly. Does that go on forever? I don't know. But they seem pretty comfortable with the idea that they're going to take some heat and the markets are going to be red in order to deal with some of the other stuff. So that was my assessment based on what you just said, Ledge, but also some of the tying in the Besant interview. Any reactions there based on the stuff that you're seeing as well?
Yeah, absolutely. Before I react to that, just let me correct the question you had asked on crude oil before. So as I said, we are down 2.6% on the day. Barrel of crude oil is $60 right now. However, we are down way more on the month. That's 8.5% and down 30% over the last year, just to have this data right. Yeah, I agree with the part that they have to be aware of this hurting the stock market. I don't think that Trump's, again, this is a pure speculation, personal thought, because I have no way to look into his brain. I just don't think he had the idea, or he would have predicted that the markets would hurt that bad, globally speaking. Ultimately, if you go back to the trade deficit figure, the US has a trade deficit of $1 trillion, and we've now evaporated almost 10 trillion from the stock markets since he got inaugurated. So that already is 10 times basically the unfairness he wanted to fix. But with all that being said, ultimately I started to DCA into global index funds myself. I have no idea how long this entire situation will last. This will be resolved over the next months, if this is going to take longer or not. So just started to make some more significant buys and have basically gunpowder to buy more over the next couple of months, but all of that with an extremely long time horizon. So my thinking there is I have no idea what's happening, but I know that I will most likely outlive Trump and I will be in the stock market for more decades than he will probably be alive if things go well for my personal health, so to speak. And that's kind of the time horizon I'm looking at right now when I make these buys.
And just for some more personal insight, when you're talking about buys here, you're thinking more stock market providing better value than even crypto.
No, it's not really having a good answer to that. Still very bullish on Bitcoin. It's just I want to have more diversification. Like I did take very, very significant profits at the top of the year. I'm now like for the first time in my life in a position where I can actually buy the dip in like meaningful amount. I still have a very strong exposure to crypto and mainly to BTC, with which I've been stacking more. But I also want to have stock market exposure because ultimately I very much like the thought that the stock market or the S&P 500 even averaged 9.5% over the last couple of decades. Subtract inflation from that, take 4 to 5% out from a stock portfolio a year, and it's basically never gonna go down. You're never gonna attack the principal, and you will be able to offset inflation. That's the long-term thinking for this, but that doesn't change like my innate bullishness on BTC and what is being done in crypto.
So the core question I have for you here, and I asked you this before the show because I think this will be helpful for people, so I'll repeat it and then we'll close out because we're at time for today. But I guess the key question when you're saying, okay, the stock market's great, it always has been, therefore it should be. The question is, are we moving into an environment which has not been tested, at least for a huge number of years? We've not had an environment where America has been so pro-tariff. And does that mean that the future should operate in the same way that it has for the previous set of decades? How do you reconcile that with your portfolio? Like, what is your answer to that question? You obviously are bullish on the stock market to kind of just figure itself out. But in this universe where we're so pro tariffs, what do you think?
Yeah, that is very much my thesis. The stock market has survived the Great Depression. It has recovered pretty quickly, even after World War II. The history of stocks has seen so much uncertainty and very, very horrible things happening, and always figured a way to survive. And that is kind of what I'm thinking too. Now, could there be a future where the entire world has universal basic income that completely changes the way how companies work, and for that reason, index funds and global index funds won't work in the way they work today? Could be. No idea if and how this will happen. But just from the tariff perspective alone, I'm like, they are a thing. They will come, they will go. Again, we had this effective tariff rate 100 years ago. And yes, the economy was way, way simpler than that. But my point being is I have confidence that the stock market will work out almost everything over a couple decades. And I'm young enough to still have the patience to do that, right? If you're like, I don't know, you want to you're 50 years old and you want to retire, or 40 or 60 or whatever the retirement age is that you aspire, and you say you have like 2 more years in the stock market and you don't want to take that risk and be fully allocated to neither the stock market nor crypto, but just given how young I am, I have the patience to sit out a lot of things.
Fair enough.
And despite Swizzy claiming the opposite in the comments, he's saying, well said, Legendary. I guess it only shows that you're getting older, moving to some of the more traditional markets, maybe, but still young enough to sit out a major crisis if one's coming.
Okay, I like it. I think that provides some perspective for people. There's obviously a variety of things going on, all fairly complex. We're doing our best to keep you up to speed with everything that is happening in the market, whether that is crypto, tariff related, stocks related. We're trying to cover it all. Reminder, we do this every single day, Monday to Friday at 7 a.m. Eastern time for 1 hour. We're live on X. We're live on X video. We're also live on YouTube. And you can catch us after if you prefer to consume the content on Apple Podcasts or Spotify. So thank you so much for joining us as always. Thanks to my co-hosts, Bread and Legendary. Thanks for Funky for his contributions as usual. And we hope you have a wonderful day. Take care, and we'll be seeing you again here tomorrow. Same time, same place. Bye-bye.